Hey everyone, I'm your host Tom Shaughnessy and welcome back to Chain Reaction, a research-driven podcast that's a part of Delphi Digital. If you're not on Delphi's research portal, you're missing out on the critical analysis read by the top minds in the crypto space, so be sure to check it out. One quick housekeeping item, nothing said on this podcast is a solicitation to buy or sell any security or token or to make any financial decisions. Hey guys, I also wanted to tell you about ZenLedger, the best tax software for cryptocurrency investors and accountants. It's fast and easy to use, and you can get all of your crypto transactions in one place so you can trade smarter and optimize your taxes. ZenLedger offers 24/7 customer support by phone, email, or chat to help you get your taxes done stress-free, and it comes with a 100% money-back guarantee because they know you'll love it. ZenLedger is giving an exclusive 15% discount to our listeners when you use coupon code CHAIN15. Go to zenledger.io, linked in the show notes below, to get started and get your taxes done fast. With that, let's jump into the episode. Hey everyone, welcome back to the podcast. Today I have two absolute animals, Michael Anderson and Vance Spencer of Framework. How's it going, guys?
Going well.
Going well. Absolute animals. Thank you for the description.
I mean, you guys have, if I had to pick a fund, I mean, you guys are in the weeds. You're invested in some of the most exciting projects. It's hard not to like you guys.
Thank you. We take pride in being pretty close to the metal.
All right. And there goes my sponsorship for the episode. Just kidding. How are you guys holding up with the virus? I know, Vance, you said you're out in the desert or in the park, actually.
Yeah. So I'm actually in Joshua Tree right now. Been here for a couple weeks and probably more to go back to San Francisco. And Michael, you're in SF.
I'm in SF. I'm looking out of the bay. It looks calm and beautiful, but we're doing the shelter in place in independent places.
Yeah, damn. It sounds like, Vance, you really bugged out. Michael, sounds like you might be in somewhat of a hot zone, though. Guys, tell me about Framework. I heard on another podcast, it was Jason Choi's, who I really enjoy his podcast, that you guys don't touch Bitcoin. Why is that?
Yeah, so our perspective is we, as Vance said, like to get really close to the metal. And this comes in the form of governance, token economics, actually building things on top of the networks that we invest in. And we really just believe that we have a better opportunity to have outsized returns with earlier stage networks, with a token that lives probably on top of Ethereum or Cosmos. And that's where we really like to play. So we don't invest in ETH killers and we don't invest in Bitcoin.
So I really wrestle with the ETH killers idea, right? Because I agree with you. I think that all the dev activity is on Ethereum without a doubt. I am just, I like to keep it in the back of my head, what if Ethereum, what if it fails?
So if you look back, I think it was now a couple weeks ago, when the Ethereum network clogged and Maker had all those problems, and some of the DeFi apps that or kind of just serve as bridges to centralized exchange for arbitrageurs kind of broke down. That was really the first time that I could conceptualize, okay, what does it mean for Ethereum to fail? You can't just have a network clogging and transactions, fully stopping if you're expecting to have Fortune 500 companies really run on top of Ethereum. So that was really, a Schelling point for us in really understanding how fast and how much work Ethereum needs to do to really get to a place that is truly scalable. But I don't think, another blockchain or a faster blockchain or a blockchain with a different architecture is the answer to these problems. I think if you look at the ETH 1.x or ETH 2.0 roadmaps, you can tell that these things are going to come. It's just going to take time. And if you look 6 to 12 months out, what can you expect in terms of network functionality, in terms of speed and transaction costs? Our base case is we're baking in a 5 to 10x kind of improvement in functionality. And I think that is a good starting point. It does well because, or it fits with the kind of progress of the network because DeFi apps are just starting to really hit traction and get scale in terms of a user base. And we expect the Ethereum network transaction functionality to really scale with that. So I think that, Ethereum is going to be in a place to succeed. It's just going to take a little bit of time, but this doesn't mean that there's a huge opportunity for other blockchains just because they're starting from so far behind. It's really hard to build developer network effects. It's really hard to build liquidity for your underlying tokens. It's really hard to build an institutional proof of work or proof of stake client base to maintain your network. So, we're as bullish on ETH as we've ever been, but, Black Thursday or whichever date that was, that was a real test for the network.
The other thing is, it's really not a fair comparison, right? Because Ethereum has everything built on it. It's dealing with issues. And when you compare it to another layer one, I feel like they wish they had these issues.
Exactly. I mean, if you were telling us that the Ethereum blockchain was going to slow to the point of inactivity a couple months ago, I thought that would have been crazy. But what that just tells us is that there's that much desired activity to be flowing through the network. There's that many apps that are built on top of it, and there's that much value that's flowing through it. And to have that in conjunction with a developer ecosystem that has thousands of developers building on top of the platform every day, I mean, that's a defensible moat that I don't see anyone displacing. Whether it's more transactions per second or sharding or not sharding or any of these different models that these ETH killers are coming out with, it's not going to be able to displace the activity that's already happening.
How do you guys, when you talk to your peers in the space, other VCs, how are they rationalizing investing in, Polkadot, other layer ones, Blockstack, Tezos back in the day? Like, how are they thinking through it when you guys have this take that you have with your position here?
Honestly, sometimes it feels like we're not speaking the same language. When we talk to funds that are really focused on layer ones, I can understand if you have a $200 million fund, you really need a addressable market the size of a base layer blockchain that has exceeded like Ethereum to justify to your LPs that you can make a 5 to 10x to 20 return on a large fund. So I think a lot of the thinking there, and that's probably controversial, that's just like people incentivized to think that way. And a lot of the dynamics of the kind of large blockchain, layer one, Series A, Series B, Series C is like, those are kind of, in our perspective, directly driven by just poorly aligned incentives and funds that just really need to have an answer to what is the large addressable market that we can get to in investing in crypto right now.
I don't know what they're buying. Like their funds are so big and there's such limited deal flow. I feel like they're all just sitting on old investments at this point.
Well, and I think that's exactly it. I think if you think back to when many of these investments were actually made, the Definities, the Solanas, the Nears, and some of them may come out and they may do reasonably well. But when those investments were being made, that was 2018, maybe early 2019 or 2017. A lot of that has to do with what was the size of Ethereum at the time when those investments were being made. And at the time, a lot of that was $100 billion or 100 plus. And so if you think about the market size there, that's definitely a much bigger area than you have right now.
Yeah, for sure. And I want to get into your guys' investments, but just on the layer one note here, if you guys saw a really innovative, interesting project like a Synthetix or a Uniswap or something built on another platform, would you guys be open to investing in it, or do you need to be satisfied in the layer one level as well?
We've had teams come to us that are pretty opinionated on, Near or Solana is the right technical architecture for blockchains in the future. And while I put a lot of stock in the kind of developer knowledge of the ecosystem and the sense that they know best in terms of what technical architecture blockchains need to succeed, I think they, as kind of a more technically minded community, really are undervaluing the network effects and the more qualitative and soft qualities that have made Ethereum and just generally kind of influence consumers to gravitate to one base layer or another. So, while I'm happy to hear, why, Near sharded approach is better than Ziliqua's, like, it really doesn't hold a lot of weight in terms of evaluating product market fit at scale and the ability to attract a user base today and in the next 12, 24, 36 months.
Yeah, it's hard. I'm always trying to think through what would cause developers to actually leave Ethereum. And the only thing that I could really come up with at this point that I think is viable is if the goalposts just keep moving and this thing gets pushed out too far. I think then you kind of lose, the buy-in of developers. But I mean, it's been delayed before and everyone's still here.
Yeah, I think the other thing is, like, people have tried every angle to take people away from Ethereum. Tron has tried basically just paying people. So is EOS. Zilliqua has tried this like sharded blockchain is the future of everything. Like, that's cool. Cosmos has tried this application specific blockchain version of the world. That's also interesting. But we've kind of gotten zero progress, meaningful progress against the Ethereum ecosystem, except for a few projects. And at this point, in our estimation, all that really seems to matter is, a sense that your blockchain has developer interest. It is a neutral platform that is benevolent to developers in some kind of strange roundabout way. And there's a lack of platform risk. And everything else, technical architecture, war chest, who your co-founders were on that blockchain, like, it just doesn't really seem to matter. And so for us, again, we just place less stock in layer one blockchain claims of, we're going to displace Ethereum because of X. If anything, if we were ever to invest in layer one, it would be post-launch. It would be after seeing traction. It would be after seeing users. Everything else just doesn't really hold a lot of weight.
Yeah, that's fair. And I mean, there's just so many launching or adding functionality, like Blockstack's adding functionality, Tesla's adding functionality. Other chains are launching, like Solana, Nervos out there. There's just so many new layer ones. It's just, I feel like there's a giant disconnect in the space. And I think that other layer ones do have a chance. I think we're early, but it does seem like there are far too many at this point.
Fully agree.
Absolutely.
So when do you guys think we get to the point of, Spencer Bogart talked a lot about vertical competition in their deck. I think it was their 2020 outlook. When do you think we get to a point where the entire blockchain space spends their time not on comparing layer ones, but comparing Synthetix to Synthetix's competitor built on ETH and Uniswap versus Uniswap's competitor on ETH? When do we get to that point?
I think we're starting to get to that point. One of the investments that we made was an investment in Kava. And one of the theses that we have within the Kava ecosystem is that there actually is an advantage to building on top of a Cosmos blockchain or Tendermint-based blockchain, just given the way that the token economics can work in terms of the added functionality of staking for security, as well as the creation of their stablecoin USDX, which when sending from one user to another does not require ETH or Cosmos or Kava to be in the wallet that is sending from to power that transaction. It's an advantage that you could have with one blockchain model over another. And we haven't seen them launch yet. They're on testnet number 5. And I'm excited to see them launch to be able to actually look at the USDX model and see if there is an advantage over that stablecoin versus a DAI or a USDC, which is going to require some ETH to be in the wallet if you're sending from an Ethereum address.
Got it. And so when you guys are looking at these specific investments, Kava, you guys invested in Synthetix, that was a big one for you guys, Common Labs. Walk me through the process internally. Like, how do you guys source these deals? How do you debate them internally? When do you decide to make an investment? How does that all work?
Yeah, so a lot of this comes down to us assessing the situation of where the market is, where these attractive points of aggregation or value start to accrue, and then go off and find a lot of these areas of opportunity. We definitely have some things that come inbound to us, and a lot of those are interesting, but a lot of what we do is deep research into synthetic assets, derivatives platforms, under collateralized loans, and then go and try to find the best in class or at least what we think is the best in class version of what will be launched. And so internally, what we do once we find the broad spectrum of opportunities is just evaluate them on essentially a 4-quadrant basis. We think about the product, we think about the team, think about the token, and then we think about or network, and then we think about community and governance. And all 4 of those have to be present, or at least there has to be a perspective from the core team on how governance could work or how community could work when they launch. But those are generally the four areas that we consider. And I think we're probably different in that we actually consider community to be one of the most important components of this entire ecosystem, because these are decentralized networks. And they're not just monoliths that are being built in silos to be released eventually and then sold. It's something that you build with the community, you govern with the community, and the token should hypercharge that.
Yeah, it's hard to explain that to the outside world, though, right? Like Synthetix's Discord is, there's so much energy there. There's so much smart people there. And I keep using Synthetix as an example, but it's just a good example because you guys invested in them. But it's hard to explain to people, like, go on their Discord and check it out, like check out all the smart people. Like, it's hard for legacy people to understand that.
Yeah, I think, we to quote Roddy Rich, we don't just talk about it, we live it. We grew up basically, in 4chan looking for interesting tokens back in 2015, 2016, 2017. Now that DeFi is quite large, we are probably some of the largest active participants in DeFi writ large. We're the largest Uniswap liquidity provider. We market make across most major DeFi protocols. Like, we're just extremely close to the metal. And so we have these kind of valuation and evaluation heuristics for the projects that kind of come to us. But really, we have strongly held theses and an understanding of what it means to build and be a part of a community inside DeFi. And I don't really think any other funds can really kind of claim that they're as close to the metal as we are in that respect, just because DeFi is really all that we do. And, it's all that we do professionally. It's all that we do personally. Like, Michael and I live together. It's all we talk about. Like, this is basically our life. And I don't think really, any other fund can have that same advantage.
Yeah, I agree with you guys. I don't know any other fund that's as involved as you guys. So the other question is, you guys are inherently very concentrated then, because if you have to spend all this time evaluating Synthetix's risks and being a liquidity provider on Uniswap, for example, you need to be concentrated because you just really can't spend your time on more than a couple ideas, right?
Well, I would say that actually the value of spending time in these ecosystems actually accrues exponentially for when we want to go off and understand these networks, understand these ecosystems, and start making more investments. To Vance's point, I think DeFi is such a unique space and such a deep and rich space that unless you're 100% focused on this industry in this area, you're going to miss opportunities, or you're going to evaluate things in a way that isn't conducive to developing a sustainable portfolio. And so from our perspective, when we're providing Uniswap liquidity, when we're trading cents on Synthetix, when we're market making or talking to OTC providers, all of that is just accruing more value to our investment heuristics, which then allows us to build a reputation within communities or build a deeper bench in terms of what we think are better opportunities. And so I think it all compiles and all builds on top of each other.
So how do you guys view a good community versus a bad community? Like, are you looking for people who are actively making changes and like smart discussion, or have there been communities that you wanted to invest in a project and you saw their community and you're like, absolutely not?
Yeah. When we look at communities, we have perspective from building them. We have perspective from kind of taking part in them. Really, the first thing that we do once we look at a project is hop in the Discord and really see what's going on, see what the energy is like, and see who the kind of basic character archetypes are kind of in that Discord. And there's usually kind of 4 or 5 different archetypes of people who are in Discords that you can key off of to tell, does this project have real momentum? Is this organic, or is this something being really pushed by the team? And really, you can whittle down probably 90% of projects that come in through the door just by seeing kind of what that really looks like. And that's, just to kind of highlight Michael's point again, that's the experience and knowledge that you really get only by seeing this, hundreds and hundreds of times and really going deep in communities and understanding how memes work and why they're created and who usually creates them and why those people are important. So, community building, as Michael said, is a core part of what we do. And, that's always going to be kind of one of the most important things we look for.
Yeah, no, I'm there with you guys. And going back to our earlier point, we're talking about like competing layer ones and communities. When you guys invest, like how do you round that out though, right? Because like you guys invested in Edgeware and that's built on Polkadot. I'm a huge believer that Polkadot and Ethereum are competitors. We'll see. But like, how do you think through like that dynamic? Like, do you have to have a take on Polkadot or are you just betting on Edgeware here? Like, how do you think through that?
Well, Edgeware in particular is a standalone blockchain, similar to Kava being a standalone blockchain that's built on top of Substrate or in the case of Kava, built on top of Tendermint. And while we do think that there is a big advantage of Edgeware being integrated into the Polkadot ecosystem, it's possible that it stands alone as its own blockchain and maybe never fully integrates, or in the parlance of Polkadot, maybe they're a parathread instead of a parachain. That all kind of remains to be seen. But the key component for Edgeware for us, and going back to our 4 kind of criteria of investment heuristics, is really governance. And community, when done well, becomes the governance model for the ecosystem and for the network. And that's where we think Edgeware actually is a huge opportunity to test all the different models of governance, because those are things that we've seen maybe 1 or 2 different models of governance out in the wild. But we need to have more shots on goal before we can know which models work and which ones don't. In the same way that maybe in 2017, it was sacrilege to change your token economics. In 2019, we saw many projects, at least 5 or 6 off the top of my head, that fundamentally changed their token economics, Synthetix being one of them. And that brought about this resurgence of growth and interest in the network and in the token that led to its success currently. We think that in 2020 and maybe 2021, similar models for governance will come out. And that, I think, is really the big opportunity with Edgeware.
Yeah, that's big. And, you keep speaking to your guys' involvement in these projects at a very granular level. I can't help but think that this gets you better deal terms than other funds. Would that be true?
Yeah. I mean, we have a reputation for basically eliminating the line between the team and the investor. Like, this is a protocol. You guys may have founded it, but this is our collective baby. And that's really how we treat things. So we're on the phone with founders 24/7, messaging them, suggesting stuff, introducing them to people, trying to fix the token economics, trying to fix the governance model, trying to fix, any recruiting that they may need to have. Like, we're pretty relentless in that regard. So to the extent that reputation precedes us, it does help us get a lot of deal flow and better terms and things like that. Just because, if you're taking a check from, I'm not going to just name names here, but one of the very large funds, you're maybe one of their, 50, children. We only have about 10 to 15 that we are really deeply involved in. And so you get, Michael or I or both of us, haranguing you every single day about things you need to do, things you're not doing well, things you're doing great. And I think a lot of people appreciate that, but it just kind of has to be your style. So that kind of influences the founders we look for. Like, we look for people who we can be collegial with, can be informal with, can, call at 3:00 in the morning and get a response. Like, that's kind of the game we're playing. And, that works really well for certain founders and for others it doesn't, but that's kind of what we kind of live and die by.
It's also a good test run, email founder at 2 a.m. and before you make an investment and see if they get back to you in time.
Exactly. Like, Sergey does not sleep. Kane does not sleep. Like, those are the types of people we're looking for. And as much as it is about what token economics do you have, what's your go-to-market strategy, all that good stuff, it's way more important to find out who's sitting in the chair in front of the desk that is doing the work, and are they kind of the person that can really lead this thing to victory, or is it somebody else? And that's really kind of what we're looking for. A plus founders.
Hey guys, I also wanted to tell you about Zenledger, the best tax software for cryptocurrency investors and accountants. It's fast and easy to use, and you can get all of your crypto transactions in one place so you can trade smarter and optimize your taxes. Zenledger offers 24/7 customer support by phone, email, or chat to help you get your taxes done stress-free, and it comes with a 100% money-back guarantee because they know you'll love it. Zenledger is giving an exclusive 15% discount to our listeners when you use coupon code CHAIN15. Go to zenledger.io, linked in the show notes below, to get started and get your taxes done fast. Vance, are you afraid of the day that comes when, Kane fades into the background, Sergey fades into the background? Like, the shift from leader to decentralization is hard, right? Like, how do you think through that?
That's something that's on our mind, pretty heavily right now. Synthetix is working to go into a full protocol DAO that's going to be determined by token voting and will resemble what is basically an elected democracy, or representative democracy. And so, we think a lot about the different models that we can help facilitate that through. But at the beginning of the network, you need that figurehead. You need that iconoclast leader who is not afraid to get out there and bang the drum and literally will, like Cain did, haven back from the dead into Synthetix, which is now, very successful. Like, you need somebody who has that willpower and that drive. How do you replicate that across, multiple different parties? They need to have that same incentive alignment. They need to have that same kind of willpower. They need to have that same drive to make the network succeed. And I think as long as you have all those ingredients and a governance system to facilitate the decisions you're making, it should be pretty seamless. But nobody's ever really tried this before. Maker isn't really decentralized. Compound isn't really decentralized. There are no comps. There's really no playbook for what we're doing. And I think that's scary on one hand, but it's also really what is exciting to us. Like, the ability to invest in a protocol that can outlive you by an order of magnitude is really, I think, what we're all here for. And, getting a governance model and the right people in the room to do that is just core to it.
Yeah, I definitely agree with you. And I really don't know why people look at decentralization in such a binary lens, right? Like, it's okay to be centralized, get off the ground, and decentralize over time. And that just plays into your governance structure.
I think it's actually crucial to have that, because you can't govern until you have a community of people who are ready to be governed, and you know what that governance model is going to be to best serve the community. And ultimately, that's the core role of the founding teams. Our belief is that, as Vance said, you got to be able to stand on the table, bang the drum, and get everybody involved. But then you also have to be cognizant of when it's time to start to pull back, when it's time to start to decentralize. And if you do it abruptly, it's never going to work. And if you do it in the wrong model, it's also not going to work. So also, as Vance said, this is stuff that we're testing with all the companies that we're working with. And a lot of them are trying different things. Some of the things are working, some of them are not, but that's part of the process.
Yeah, it definitely is. It's a tough road. And guys, let's talk about the end of an investment. I don't know if you guys have sold anything yet or exited any positions, but I know you've probably thought about it. When do you decide to exit an investment? And after like a certain valuation, a run up, and why would you exit something? Like, what would cause you to exit an investment in a more negative sense? Like, if something happened, like, what would have to happen for you guys to leave early?
So for us, it's really a qualitative assessment. I think there's a number of funds out there that think about things in pure quantitative metrics. But for us, it's about getting to know the team, understanding where they are on their development process or their life cycle, understanding the timeline of when things are going to launch, and then understanding what is a qualitative understanding of the deliverable or the realization of the potential of the network. And from our perspective, none of the investments that we've made so far have reached this potential yet. Some of them have gone up 10x, but that's not a reason for us to sell. But we think about it in terms of qualitative metrics, whereas I think other funds who will also go unnamed to think about it in terms of quantitative. And I think that becomes a competitive advantage to us, both in terms of the return potential of what we're looking at, but also how long we're going to be by the side of the founding teams and the communities, because we're going to see it through to the very end.
Yeah, it's tough. I always try and think about that. Like, what's my number? Not that I'm anywhere near that, or why would I exit an investment? I feel like it's always quite a moving target along the process.
Yeah, it's scary to hold things that are volatile and that go up a lot. And you're saying, okay, these were once magic internet beans and now they are real cash. Should we sell? But in our perspective, we've invested in crypto for a long time. The only way you make money consistently is to buy things that you have high conviction in that are not in the popular narrative, and to hold them for a long period of time until you're starting to see some semblance of the realization of the vision that the founder initially put out or kind of declared later down the road. But we don't see anything that really makes us want to deviate from that. And when we think of funds that are, in or trying to get in rounds of companies we're investing in, and that are saying, oh yeah, we'll buy it at this valuation, but if it goes up to this, we're going to take risk off the table. That's just not for us. Like, you're kind of in or you're out. There's really no middle ground.
Yeah, I mean, you should always be reinvesting in your winners. It seems like just contrary to good results to do the opposite.
Absolutely. And the other thing I would add is that these are venture style investments, and without a venture style mindset, it's not going to work. And some of the larger fund of funds and investors that we're talking about for future funds for Framework are aligned with us. And I think that is really the only defensible advantage that you can derive as a fund manager. If you're constantly buying and selling, not only are you misaligned with the core teams and the networks, because you're constantly moving the price when you should be aligned and stationary, you're not going to be able to derive a competitive return, because eventually the word will get out that, hey, you're an investor, that short-term mindset, and you're going to take risk off the table the first chance you get. That's going to limit your deal flow and limit the number of teams, great opportunities that come up that aren't going to want to work with you.
Yeah, it sends just a horrible signal. Like, as a founder, you wouldn't want one of your investors, you wouldn't want to think, oh, they're going to leave, tomorrow, 6 months, a year. It just sends a horrible signal. Guys, yeah, for sure. Guys, just switching over to Futureswap, you guys invested in them recently. Could you walk me through what the thought process was there? There's obviously a lot of centralized competition in the space.
Yeah, so with Futureswap, our perspective is that there is a massive opportunity for decentralized networks who can take 1% of the open interest of BitMEX. And maybe a month ago, 1% of the open interest in BitMEX was a lot more than it is today. But using the centralized comp for derivatives exchange volume or open interest across any exchange. And our belief is that 1% derives a token model if the fees and the value capture methods of the token are done well, the token economics. If you can find one of those tokens, it's a multi-billion-dollar token. And so from a Futureswap perspective, we're obviously big liquidity providers on Uniswap. We love the model of the pooled model that Uniswap has. And with Synthetix, we love the idea of future positions with leverage. And so for us, it was just an obvious fit. They combine the best of both of those. They have a novel token economic model, and they're launching soon. And I can't wait to go 10x long ETH, because I think it's one of the most undervalued assets you can imagine right now.
Yeah, it's interesting. Yeah, I really like that focus. I'm wondering when the day comes where you guys are going to have to decide where you put your liquidity, like where you invest your liquidity into, right? Like, if you have to decide between a scarce amount of capital you guys have and you want to put it in Uniswap or you want to put it in Futureswap, like, do you guys envision a day when you're going to have to make those hard decisions, or is it kind of a good problem to have?
For us, we are seed investors in Futureswap. We are going to be their biggest liquidity provider. We will continue to provide liquidity to Uniswap and other liquidity pools that benefit Synthetix. Just because, on Futureswap, the fees are going to be far superior to those on Uniswap, just because of the model and the traders and the fee structure. But I think, the really interesting thing that I've been thinking about recently is, okay, what is decentralized finance going to look like when it's fully mature? My estimation is basically that there's going to be a bunch of liquidity pool models that cater to very specific assets. So Futureswap is a liquidity pool for futures. Open is a liquidity pool for options. Uniswap is a liquidity pool for spot trading. And then you're going to have those liquidity pool models, and then you're going to have synthetic asset issuance providers. So Synthetix makes synthetic crude oil, synthetic gold, synthetic BTC, synthetic 10x long, Chainlink tokens. And really, you can put any of those synthetic assets in these different liquidity pools, and you're getting the composability and distribution of those assets, and you're helping bootstrap a fee base for them as well. And so, I think kind of maybe what some of your question was leading into was, what does competition look like in this space? Can your investments coexist? What does that look like? We want to own a large chunk of the synthetic asset provider. And we want to own large chunks of liquidity pools that generate meaningful fees from trading different products. And so really we see the decentralized finance landscape really in this weird co-opetition kind of space where, the first liquidity pool on Futureswap will be DAI and ETH. But the second liquidity pool, because we'll be the largest liquidity providers, is probably going to be something like DAI and SBTC, where you have synthetic assets from Synthetix living inside the Futureswap liquidity pool. And I think that's really going to start really blowing people's minds when you see this different model of competition and fragmentation than you do in the centralized exchange landscape.
That's super interesting to think about. I guess it puts you guys in a good position because you're able to, I guess, be that bridge of co-opetition between these teams. So you could say, hey, Futureswap, do this so you don't destroy your model and work with Synthetix, and with Synthetix, you could do the same. I guess it will get a little murky, though, right down the road, like if one team wants to drive more value than the other. But I guess that'll just come down to just market demand and normal interest, right?
Yeah, I think there's a lot that we do that's definitely going to be part of an overlap of a Venn diagram. But ultimately, I think these models are and these markets are so big and so different that you're going to have enough of the market to have these subclasses within. And having something like Futureswap incorporate a synthetic asset platform like Synthetix is the exact same thing as saying, let's incorporate DAI into Futureswap. And maybe eventually Maker wants to get into synthetic or future positions as well. But just because they haven't yet, we're not going to say that one is competitive with the other. And we think that there is a huge co-opetition, but then also collaboration potential where having the first synthetic Bitcoin on Ethereum that doesn't rely on an over-collateralized liquidity pool or some other model that's being discussed right now, that could be a huge advantage for realizing an ERC20 that represents the value of a Bitcoin.
Yeah, that's big. And you guys are literally seeing all these projects, right, as they're growing. It's interesting. And I guess another maybe side question here, unrelated, is you guys really don't get bogged down with the whole Bitcoin versus Ethereum debate that I feel like a lot of people get bogged down with. And they won't look at a Futureswap, they won't look at a Uniswap because they just have this gate where they can't think past one asset. How do you guys kind of think about that and the people who do that in the space?
I mean, God, like
Vance, this might be a lob for you.
Yeah, it's isn't it? So first of all, I think that those are the really vocal minority that really care about those distinctions, and most everybody else seems to be here for either the tech or the speculation. Speculation is totally fine, by the way. I love that use case, and really that dichotomy doesn't matter to them. We don't think about it. The space that we don't really play in is like, what does the seed stage tech landscape around Bitcoin look like? Like, do we want to invest in Lightning Network? Do we want to invest in kind of things like that? Because those are ostensibly for DeFi. Personally, I think, or we think that Ethereum is just much more expressive and much more interesting, and the core community seems to be better aligned around technological innovation, and so that's more where we play. But I think that things like TBTC and bringing Bitcoin onto Ethereum are potentially really interesting, and we're definitely excited to kind of see those play out.
Yeah, I'm with you guys. I think Ethereum has the devs; it has all the growth. I own both Ethereum and Bitcoin as well, but I guess the question for you guys, I'm sure you've debated this internally 1,000 times, is everybody brings up how it's a winner takes all market for security spend, for value accrual, for money. How do you think through ETH's value capture versus Bitcoin, like through that lens? Like, hey, even if a zillion things are built on ETH, someone from the Bitcoin side will say, well, it really doesn't matter because the trust is in Bitcoin as an asset. Like, I guess, how do you think through that? And it might be a longer question, but just interested.
Yeah, so I think if you break down what is a Bitcoin versus what is Ethereum, they're two fundamentally different capital assets. Bitcoin has proven that it is the decentralized digital store of value that we have thought of, and it's not going to become a money, it's not going to become a means of transfer, but it will be something that is a store of value and a collateral asset potential. And that's exactly how we see it working potentially within the Ethereum ecosystem. There's no deeper pool of decentralized collateral out there than Bitcoin. And if there is a bridge that can be built, whether it's synthetic or real, whether it's over collateralized or evenly collateralized, it could become a huge opportunity for the DeFi ecosystem because you can tap into $120+ billion of collateral. In terms of Ethereum versus Bitcoin, Ethereum, the analogy that I like to give is it's kind of like thinking of Bitcoin with 8 different opcodes as a Swiss Army knife. And there's so many things that you can do with the Swiss Army knife. And at the time, it was this most useful tool that people bring with them to be able to get most of the things done that they needed. But then you compare it to something like a Turing complete smart contract platform like Ethereum, and with the developer ecosystem, the tools, the wallets, the infrastructure, the verified code that exists already, the ERC20 ecosystem, and you compare that, and it's like comparing a Swiss Army knife to an iPhone. You can create any app you want on an iPhone so long as it runs within the confines of that device, and you can bring it with you just like you can a Swiss Army knife. And so that's generally how I think about the value accrual mechanisms, because I think a lot more value will accrue to the things that are built on top of an iPhone as opposed to what you can use a Bitcoin for.
That's a really good summary. Yeah, I mean, I own both. I haven't been maximally swayed either direction yet, but it really does come back to what people think money will be, where they want to store their value. And I think ETH has a higher growth curve or a higher learning curve. People really have to understand how to use MetaMask, Synthetix, Uniswap. But once people get it, it's hard to get them back out. I feel like once they use an application on ETH, they really get it.
And the only thing I'd add is that I see them working together in the future. They just have different use cases. And I own Bitcoin. I own some ETH. And I think that Bitcoin could be the digital store of value. And whether or not the market size of the digital store of value is 10 trillion and maybe the entire SaaS market or whatever other comp you'd want for Ethereum is less than that, I'm not really here to compare those two, but in terms of value accrual and functionality, I think there is a big difference.
Yeah, no, I'm there with you. And are you guys excited about how ETH 2.0's launch will affect your current investments beyond increased throughput? Like, is there anything that ETH 2 is enabling that will allow any of your current investments to do radically new things that you know about now?
So I think with ETH2, the two main components, you touched on one, which is throughput and functionality with additional throughput. I think it'll be interesting to see where 1.x and 2 kind of either merge or diverge. There's still a lot that needs to be figured out. But the core component, I think, with DeFi is that it's going to become more competitive with CeFi. The main reason why you have, I think, the BitMEXs or the other centralized Binances of the world is because they have the throughput and the functionality that you would need if you were an active trader, a market maker, or any market participant in a traditional finance sense in these centralized finance applications. But what you're also doing is you're implicitly trusting the collateral capabilities, the liquidation methodologies, and the different order routing engines that these centralized players have. But if you were able to have that in a decentralized, open, transparent model with the centralized throughput, I think that there's no comparison that DeFi overtakes CeFi in terms of volume and interest.
Do you think about any issues on the regulatory front? Like, do you ever view any way for governments to block this, to hamper it, and potentially push centralized solutions instead? I mean, the backdrop here is pretty bad for centralized solutions. We just saw a lawsuit roll out that names, every major, entity out there at this point. There's 10 or 11 on there, Binance, EOS, stuff like that. But how do you think through regulation and arbitrage there?
Yeah. I think the first thing is we have very good lawyers.
That's a good one.
Yep. So, tactically on the ground, we're we're talking with the projects we invest in about the best place to domicile, the best way to structure yourself, the best way to do what you're trying to do. We'll never tell you not to do that, but we'll just give you good, high-paid legal advice. So it's kind of the more tactical side. Taking a step back, I think the arc of technology bends towards decentralization and open source. You see all the problems that centralized exchanges are having with hacks, with custody, with sharing customer information, with playing kind of regulatory hopscotch around the globe, moving from Singapore to Malta to, Easter Island. Like, there's only so many countries that you can get kicked out of before you're like, okay, I probably need to either decentralize this or wind it down. And so that's kind of how I think about it from that perspective. Even to go a little bit more higher level, I think we're going to see a lot of decentralization happening, even for some of the biggest technology companies in the world. Like, the algorithms that dominate Twitter should probably be open source. And that network should probably be incentivized and maintained by a community. At this point, it's more of a public good than this kind of random equity corporation that's just charging ad sales and making money. And so we think that the arc of technology bends towards decentralization. Regulators will eventually understand that regulating a protocol is probably more efficient than trying to go after a centralized entity, and that you can allow stakeholders to really have a share of the business and of the decisions that are happening. And so, we're pretty confident that decentralization will eventually be seen as more than just a regulatory arbitrage play, and is eventually something that is a more fair and more equitable system for people to engage with technology. I think the thing that I would add on there is, I shared this on Twitter, but, the past 3 months, I have a personal account that I punt around leverage and do kind of just funny stuff with in crypto. And, I haven't really logged into a centralized exchange other than to convert fiat to crypto in quite some time. And really that's kind of reflective of, one, things are starting to get developed enough that, you can trade on leverage and you have platforms that are feature parity with the centralized platforms. But more than that, I think customers are starting to fully realize that they're not really getting a fair shake on platforms like BitMax or Binance or the centralized operators that have traditionally dominated the space. And that consumer preference, although it is subtle, is really going to start to manifest over the next kind of 2 to 3 years.
Yeah, it's interesting. I never really thought about traditional companies decentralizing. I feel like Elliott, who just invested $1 billion in Twitter or some amount, would definitely argue against you here. But, it's interesting to think about.
Well, Elliott is trying to stop the CEO from going on a 6-month vacation to Africa.
Yeah, I
ostensibly, in a decentralized system, you have a easier way to pull the levers to get a higher level of corporate responsibility embedded in a network than you do by just kind of getting into a proxy fight with Jack Dorsey.
Yeah, exactly. I am against the 6-month vacations. I don't know how you could manage, but I love Jack. He's just universally loved, at least at the retail level.
Yeah, he's done a lot for Bitcoin. He's got good facial hair. So.
Yeah, no, he's got the flow. Well, guys, last question for you. What's and this has been incredible, but what's one growing pain you guys face at Framework that you got over? Like, we've talked about all the good, but what's something that you guys had to overcome, deal with either internally or with projects, or maybe a thought process or a philosophy? What's something big that people might not be aware of?
So one of the things that we've been working on and really kind of building a program around, and maybe taking a step back, we have Framework Ventures, which is a venture style investment vehicle. We also have a sister company called Framework Labs, which is where we do development. Well, we actually do some of the market making and some of the liquidity providing out of that entity, and it's a company that Vance and I control as well. So we've been working with projects to figure out what's the most high levered thing that we can build to actually affect either distribution or understanding or anything within these networks. And it's been difficult to try and figure out what is that thing and how do we go out and build it? How do we fund it? And one of the things that we've been working on with Synthetix, which we're really excited about and kind of capturing all of this into one single tool is a tool called snx.tools. And it's a new platform where it'll act like the Etherscan of the Synthetix ecosystem. and it'll be all the bells and whistles, and we'll actually have some cool new products coming out on top of that ecosystem of tools. But getting to this point has been pretty tough. Figuring out the funding model for development, finding people to work on it while we're also making investments has been pretty difficult. But this is another instance of things where we want to affect the change that we want to see in the network, and we also want to be as close to the core teams that are building this stuff as well, because we want to be building it too.
That's candid. I like that. And I feel like you guys will figure it out. And I mean, it's already a website for SNX Tools to begin with. It's nice that you have that development lab to not only focus on the financial things, but also, the actual dev work as well, which is great. Guys, this has been one of my favorite episodes. You guys are down to earth. You're investing in some seriously cool companies. Where could people follow you and find out more?
Really enjoyed it too. Framework Ventures is our website, or follow us on Twitter. And usually Vance has some spicy takes, and it's fun to chat about this stuff all the time.
I like that. Yeah, Vance, I like your takes, man. I mean, if you've been in the space so long, eventually you just get to the point where you want to post memes and have fun, because most of the stuff is just too in the weeds.
Yeah, you can't take crypto too seriously. You got to have a little bit of levity.
I'm right there with you guys. Thanks so much for coming on today.
Thanks, Tom.
Hey everyone, thanks for listening to the podcast. If you enjoyed it, please support the show by hitting subscribe on iTunes, writing a review, or sharing this episode on Twitter and LinkedIn. And stay tuned for our next episode out soon.